Another Sunday session on November 16th. For many of you, you know that I spent over a decade using Sundays as my favorite day to review. Sundays would be the day that I'd get in the office, I'd do an hour or two. The beauty of it is the market is closed. You can focus your full attention. Your mind isn't just total mush from a long day. And so I am sharing with you all what I would do on my Sundays, where I would review the prior week, I would study the best opportunities, then I would prepare for the week ahead. I would start to build a game plan of what I'm thinking. I would think about what I need to work on and what to focus to make that week a win, and so that I could progress and move what I call my bobblehead higher, increase my expected value. And so if you enjoy this stuff, like and subscribe. I've been doing this every week, travel schedule permitting, and I wanted to start this session off by first talking about the tunnel of despair. So yesterday I spoke with a young trader in my network. I speak with a lot of people nowadays and try and coach them and help them. And so this trader is about a year into the trading journey. I kind of like oversaw his journey as he first started and everything. And 1 year in is generally when you are pretty much in the shit. You're struggling, you're suffering, you're not seeing the progress. I know this happens. I've trained so many trainees, right? At Trillium, I probably saw over a dozen classes go through, and I was training for at least, 5-6 years. And the 1 year mark is brutal because that's where people start to think they've worked really hard. That's when they think they should start to see progress. But as I like to say, this can often be a 2-year or more learning curve, even with a professional firm. So when I was speaking with this trader, he was explaining to me that he was pretty beaten down. He was beat up. And I remembered all these feelings. Because he doesn't have a bunch of money. He's struggling to survive out there. He's thinking about the opportunity cost of what if he was working a different job? And will he make it to the other side of the tunnel? And should he, it's not even a matter of should he. This trader wants to keep fighting because he loves the job. This job is his dream, but he just doesn't know if he's going to make it. And so here was my advice to him. So part of surviving and making it through the learning curve is exactly those moments. We all face those. I faced those moments without a doubt. I wasn't making any money for my first year. I think I was negative every single month. And this is where you focus on the process and not the outcome. This trader had expectations in his head for himself. No matter how much you tell people that they are not special, this is a 2-year plus learning curve. Everybody secretly, deep in their hearts, thinks they're a little bit special. And they think that applies to other people, but not them. And so they get attached to this outcome or this timeline. I need to make X P&L by this date, or I expect myself to achieve this much, or this will happen and this will be easier than I thought. I don't think anybody thinks it'll be easy, but at the same time, I don't think people recognize that it's gonna be that hard. And what I found with this trader is a lot of things were seeping into his mindset that was him focusing on the outcome. He thought he would be making a certain amount of money. He thought he would be, successful out of his peers. And even with his trading, he tried to accelerate his growth by betting bigger. And that's not really how it works. We don't accelerate our growth by betting bigger. We accelerate our growth by making the right decision at each moment in time. And when we get really frustrated, often it's because we are upset with our performance and our P&L. And in the beginning, if you're upset by P&L, you're going to have a lot of struggle. And when I look back on my start, I struggled so much with those emotions. I had periods where I was super depressed, I was super frustrated, it would ruin my weekend. And what I would do is I would work harder. And sometimes that can burn you out. Like, you need to find the right balance. And so my advice to this trader was I pointed out all the ways implicitly that he didn't realize that he was attaching to an outcome. And he's going to stick this through. But the thing is, if you focus on the process, not only is it more optimal because you're going to grow faster, and a lot of the reasons why he hit speed bumps was because he was trying to grow too fast and just not follow the process, but you're also going to enjoy it more. And I think, if you're going to stick this job out for at least a couple years, you need to be enjoying it as much as you can. And if you make your life hell by being upset and frustrated and feeling like a failure every time you have a red day, you are going to have a really tough time. If I had to take a guess, even at my best, I think I was probably positive maybe like 70% of days, 65% of days. That's not that good. That still means 1/3 of days I'm losing. And that's why like some of the psychology books, like The Biggest Loser Wins, it's true. Like so much of surviving at this job is being okay with losing and then just learning from it. And a lot of times this trader wasn't learning the lesson he needed to learn at that time. And much like in life, every time we don't learn the lesson we need to be learning, that just slows us down. Whether it's at the gym, we try to progress too fast. Whether it's, we're inconsiderate in our friendships or we're a shitty partner in our relationships. If we don't learn what there is to learn from that, we're going to keep on repeating that mistake again and again and again. So I wanted to tell all the people in that tunnel of despair right now, like, whether you make it, you will make it to the other end. There is light at the tunnel. The key that you need to remember, though, is that light at the end of the tunnel, it may be success at trading. It might not be, but no matter what, it all works out. And what I told this young trader is I've seen so many traders fail. I've had to fire and let go so many traders. But at the end of the day, every single one of them ended up happy. One of the traders I had to let go, and actually one of the people in this chat, he was just on a bachelor party for one of the traders that I had to let go. And trust me, that guy is happy at his job. He's getting married. He's living his life. Every single trainee of mine that did not make it, life went on and they're happy and they found the right fit. So that's the little message I want to start off with, because I think there's a lot of traders out there in those emotions and feeling that. And I'm kind of far removed from it at this point. And I don't think there's enough people that say like, look, it is really, really hard. And like that is a psychology game that leads to success in this job. So if you're in that tunnel, keep pushing, focus on the process. Whether it's trading or otherwise, life will work out. All that said, one sip of water, then we're going to jump into this. Okay, so now what I would say is before I jump into this, I got to do the disclaimers. This is not trading advice. This is not investment advice. This is for educational purposes only. Please make your own decisions. My decisions and views change every second, minute, day. What I feel now might not be reflected in the future. You should not trade on this advice. I'm not responsible for losses, or as always, if you get attacked by a flock of pelicans. Sometimes that does happen. We got a couple reports from some of my users over the weekend that they were hit by them again. So be careful, folks. It's dangerous out there. Okay. Last week was super fascinating. So we started to get a really decent sell-off in tech. And if you follow kind of my Twitter, I was pretty much post Palantir earnings. I kind of thought this could be the second leg lower, right? So what happened a couple weeks ago, Palantir had earnings this day. It had earnings this day, but it was also when like the quantum names and some of the other names closed really, really weak. And so what happened with Palantir is we shot up after the close. We pulled back, paired the gains, then we started to really roll over, and the whole market went with it. And what also happened is the Qs broke that trend. I think the Qs broke the wedge. I think it was that day. Let me check this real quick. Yeah, it was that day. So the Qs broke their little wedge, and we sold off, and that led to this sell-off. And my belief was that was going to be the leg lower in froth. Stuff like RGTI, which indeed has rolled over considerably. Stuff like the QBTS. Stuff like ACLA, which didn't roll over that much, but like stuff like MBIS certainly died. And even stuff like BE, which I'll get to in a moment. And we ended up then really, really accelerating into the end of last week. And so I want to always start this by separating two separate views that I think is important. You have stocks that were quite frothy. Stuff like the quantum names, stuff like ACLA. I mean, these companies don't have any real revenues, yet these have, I mean, look at what ACLA has done. ACLA has gone up, I don't know, 10x in the last 6 months. QBTS and some of these quantums have gone up, I don't know, still they were up like also 10x in the last couple months. So I mentally try to separate froth from the market. So a lot of people, I mean, even in the real world, people are like, oh, Lance, do you think we're due for a crash? And I'm like, I have no idea, but I don't think so. Like, here's the thing. Like, in the overall market, this was the big flush out. This was a crazy, crazy move in the NASDAQ and the overall market. We then broke out from 540, like epic breakout here. And the truth is this move has been very, very steady. So like, I don't particularly think we're due for some massive crash. I don't think valuations are all that crazy, but it's not even that. It's just that the chart isn't that crazy. So I try and do a really good job of separating the froth from companies that are more real, stuff like Tesla, stuff like NVIDIA. My God, that bounced. Stuff like Palantir. I mean, Palantir is a little frothy. Palantir is pretty damn frothy, but like NVIDIA and Tesla, less so. SanDisk was pretty crazy. And so even into last week, one of the really interesting opportunities was the SanDisk, which had gone and broken from $60 long term. This SanDisk broke out from $60. Massive move, right? I mean, the initial leg, 40 points. We almost go another 40 points. Then we start to really accelerate. And what's so wild is if you look at this like 5-year weekly, oh my God. Like, look, I mean, yeah, this hasn't been around that long, but look how silly this is as far as this acceleration. I forgot this hasn't been. Let me do STX. Like, STX hadn't done anything for 10 years, then boom. It's kind of just like tripled out of nowhere. WDC, same thing. SanDisk, we don't have the price data, but it would kind of be the similar deal. And so some of that stuff's getting silly. And so stuff like this SanDisk, this was the type of thing that I was starting to sell calls on because it's been so many legs higher and I'd want to be short above 300. But then we end up breaking the trend. So we were holding prior bar lows. We break prior bar lows. And for those that have seen some of my videos on defining the trend, that is an entry for me, especially when we're so overextended from the moving average. So what I did was I shorted that break of prior bar lows, and that was going to be my short. And then, I mean, I was still short some of the quantums, RGTI, QBTS, and with a lot of that, then the market ended up selling off quite aggressively. One of the most interesting tickers, in my opinion, last week was this Bravo Echo. I mean, there were a couple things. So Bravo Echo has been fascinating. This stock has been run up really, really hard. But we've been steady strong up here. We gapped up on earnings, then we were steady strong. So now, here's the thing that I'm going to tell you. One of the most important skills as a trader is the ability to connect charts and have these mental frameworks in your head. And Nate of Investors Live is really good at it, but he's able to see one chart and connect it to charts in the past. And I think if you really study charts and you really study this stuff, your mind starts to do it automatically. You're able to make these connections. One thing that I think is fascinating is a grandmaster in chess. He is able to memorize and process the board in a way that novices aren't. He can see all the patterns. He can see all the formations. He can see that because he has this mental structure of how price works. If you were to give him something different than a chess set, or the pieces were in random places that didn't make sense, he doesn't have that framework. But he can see the patterns from so many years of studying this stuff. And I think stocks are very similar in that way. When I see charts, I'm constantly making these connections in my head. And so here's the thing. This Bravo Echo to me was extremely similar to this Palantir back here. And this Palantir on 8-21, or 8-20, excuse me, was one of my best trades this year. And what it was Palantir was steady strong. Palantir gapped up on earnings. We were steady strong on earnings. We start to sell off. Then we went from upper Bollinger Band and puked really, really hard on high volume down to that lower Bollinger Band. Like, this to me was like an A+ setup. On this setup, I had obscene size. I think I had something like 200,000 Palantirs, which is mucho Palantiros. Sorry, I just got back from Mexico, so sorry if I speak a little Spanish. So this Bravo Echo, this stock has been really, really strong, a little bit more euphoric. I mean, this has been a way bigger move than what Palantir did, but the similarity is this was then steady strong, right? We're never really above the Bollinger Band that much. We gap up on earnings. We're steady. Then we roll over, upper Bollinger Band down to that lower Bollinger Band. Again, let me show this again. Steady strong, gap up on earnings, boop, 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 boop. Consolidating price acceptance up here, then we really roll over. And so this Bravo Echo to me, even this day on 11-13, this started to capitulate. But then when we gapped down on Friday morning, that was to me one of the highest probability longs that day. And this to me was like my A+ setup, and I smoked this thing. And it's that same concept of, oh my God, this is exactly like Palantir, and this is the play I love, love, love so much. And so when traders talk about this job being a lot of pattern recognition, that's what it comes down to. I recognized my favorite play in Palantir. A couple months later, I see it again in Bravo Echo. And this is the type of setup you can screen for. If you don't have screeners for this, you can use websites like StockFetcher. I've been using them for 15 years. It is laughably cheap and affordable. I think it's like $120 a year. I don't think they've changed a thing in 15 years, and I can screen for this stuff. And you can get some really amazing patterns. And even if you just master one setup and you study the setup and you database it and you document it, you can become the master of one punch and have a career doing this. And that is part of what trading success is. And so I've been studying patterns like this for, I don't know, going on 15 years. And so what happened on 11-13 is this started to capitulate. Now watch this. So this is, I always start with the daily for context. So in an ideal world, I would have really wanted down here on one day. That would have been probably too much to ask for. But what ended up happening is off the open, we do about an 11, 12 point move, 124 to 112 or so. Minimal consolidation. Then we go a symmetric 12 points. So I always look for symmetry. This is leg one. This is the counter trend consolidation. This is leg two. Now look what happened with the volume. Massive, massive, massive volume. And so what ended up happening is, look, we're holding prior bar highs, prior bar highs, prior bar highs. I'm starting to buy into this just because I want some stock. Then once we break trend, I'm buying the shit out of this. As we start to bounce, we're holding prior bar lows, prior bar lows. So I take some off out here, down here. Okay, that's great. And part of this I wanted to swing. But, what I really wanted is we have kind of the highs. These are the lows. These are the lower highs. Then, we're kind of just trending lower. So these are kind of the big picture bottom, ideally. We then put in a high up here. We put in a lower high. And what I really wanted to see is us break above this range. If we broke above this 106, that would have been confirmation to really overnight this, and I probably would have added. In fact, this isn't kind of so dissimilar from that Nikkei trade back in August 2024 that I've spoken about and have like a zillion videos on. So when we failed to confirm and get above 106, that worried me. And so one thing I did as we started to sell off, and this would have been super smart. So I was reducing my position to something I could manage and not sweat. So I was just in case this gapped up, I was going to hold like 15,000 of these. And so one thing that I did was super smart, but I didn't hold the reservation on, is with the thought that this could gap down a ton on Friday, and the beauty of it being Thursday, that meant the puts were really cheap. There was only 1 day of time value of money on those puts. So what I ended up doing is around here when we were kind of rolling over, I ended up buying some $94 puts, like a shit ton of puts, just in case we gap down. What buying those puts would have allowed me to do is if we puked and went to like 90 or something, or even 92, I could have gotten long against those puts and it would have capped my max loss. Essentially, I think the puts were like $1.50 or something, maybe $2, $1.50 to $2. So my max loss on any long would be essentially kind of those $2 if that expired and I didn't get anything, right? And so that would have been beautiful. But then what ended up happening, this kind of got me, is once we reclaimed and bounced back to 105, I sold those puts and I kept just like 15 of these. Sure enough, we ended up bouncing, we didn't end up bouncing. We ended up puking pre-market, right? So stuff ends up selling off pre-market. The NASDAQ is weak, right? So stuff goes weak. Stuff like Tesla starts to melt, which I'll get to in a bit. But this Bravo Echo does end up gapping below 94. So if I had those puts, I could have been long all this stock and had a free roll on that long, because no matter how much it went down, I would have been hedged out because of those puts. So that's like a really way you can use options to structure some of these trades. Shark at SMB Capital is incredible at doing stuff like that. I am hoping to do a podcast with Shark actually after around Thanksgiving. So fingers crossed. I know a lot of people love that guy. He's one of my best friends, and maybe also one of the traders I admire most. So hoping to do that podcast later. If you're not subscribed, give a sub because it's going to be amazing. And so then my view with all this stuff is, well, particularly this BE, like the daily chart is everything, right? This is the pattern I was looking for. We gapped down right to kind of, I mean, I would have loved even like 90 or below. And so my thought was like, if this goes higher, I'm going with that. And so this ended up being an amazing long. And so then even Tesla was also really melting. And so even with something like Tesla, this broke out from like 370 or so. And so with this breaking out from 370, that's kind of the level. A lot of times resistance can become support. So I was really hoping when we were down at like 382, I was hoping it would puke out into the low 370s so I could get long, thinking that a lot of buyers will step in, especially like this is a really big move already. Now keep in mind, like Tesla isn't that euphoric. Like it wasn't, we were steady strong up here. Very steady strong. So if we retrace that whole breakout in 3 days, it would have been amazing. And again, this is different from some of the froth that I want to be careful of. So even this I was buying into. I was very long biased going into Friday. And so especially once we started to rip off the open, that was kind of like, okay, this is, I always flip this. I think this is what they call an oops down day, or is it an oops then you go up day? I forget. It's either an oops up or an oops down. I always flip the two. But if you're not familiar with some of those traditional technical analysis patterns, worth studying. And so then there are also some things like this Oracle was just getting taken out to the woodshed. And so this was gapping down quite a bit after like, I mean, this had that big AI news, and my Lord, not only is it paired the whole thing, but we're down even 10% from there. And this MSTR, Bitcoin didn't end up bouncing, but I do feel like this MSTR could, if this MSTR kind of pukes, this is going to be interesting. So I took a stab in this didn't end up going. So now what ended up happening, right, is a lot of stuff rallied really big. You know, I mean, this SanDisk rally was ridiculous, but even this Bravo Echo rally was ridiculous. And so what I ended up doing once I even got flat is then I'm starting to sell calls, because I think like, you know, this was long in the tooth and the implied vol on this stuff is just out of its mind. So those are some of those situations where when, like a lot of what I'm doing is the pendulum concept. And I've done videos on this before. Like when the pendulum swings super bearish, or sorry, when it swings super bullish, I might want to sell calls or get short. When we swing super bearish, I might want to sell puts or get long. And a lot of what I'm doing is I'm playing that pendulum in sentiment. We were steady strong in sentiment, then boom, all of a sudden we go super weak. We go from steady strong to, oh my God, panic, right? A ton of like, I mean, we dropped what, like over 30% in a couple days. The other thing that I would say that's really important as well, like why were we selling off? What is the fundamental driver that was causing that sell-off? The answer to that is, to my knowledge, there really wasn't one. And the more experience I get, the more I've come to realize that stock prices, and really any prices, are all driven by sentiment. Yes, fundamentals eventually do matter, but in between, the swing that stocks can have on sentiment is incredible. Like, what has really changed between with this stock being at 20 or 30 and 150? Probably close to nothing over 1 quarter. What has changed in SanDisk, right? We knew that AI was coming. We knew that all these cloud servers were being built and cloud computing is going to be big and GPUs are in demand. Then all of a sudden we go from 60 to almost 300. Wild. Yes, these fundamentals, like if you look at the financials of SanDisk, It is massively inflected. It absolutely has massively inflected. But these are still crazy, crazy moves. If you look at RGTI, what has changed from when RGTI was a dollar stock versus when it was a $55 to $60 stock? Essentially, what changes is sentiment and hype and market themes. And that is always very important. Another stock that has been fascinating and worth studying is this Circle. This Circle was, if you followed my stuff for a while now, you've realized I've been super short biased on this and bearish because of the impending lockup. And if you've not studied some of the lockup expiries, what you want to do is study stuff like Circle, study stuff like CoreWeave, study stuff like Beyond Meat. Beyond Meat was one of the incredible old school ones. RIP, Beyond Meat, not the IPO it once was. And so this lockup was a super interesting stock as well, because if you read the filings, you'll find that, okay, it's normally a 6-month lockup expiry, 180 days or so, but this was able to lock up early. It's 2 business days after the earnings. So this was a big earnings report. And one interesting thing is the amount of gravity on the stock. Like, look what happened. Any pop would just get faded. Why is that? Because you had gravity converging into this lockup. And so these are a lot of cool plays you can start to study. These are a lot of plays I kind of go in depth more in my monthly summaries. And this is worth studying now. So what do I think for the week ahead? The week ahead, I mostly think you need to be cautious. Not cautious in the, oh, I'm bearish sense, but cautious in the, oh, I think we're probably going to consolidate. And a lot of what I do is I take a look at the overall market and also the main stocks I'm following. And right now we kind of had a panic, we reclaimed. We had a little mini panic, we reclaimed. As of now, the market is mildly up, stuff's mildly bouncing, and everything kind of looks roughly in line with where it was around the Friday close. And I suspect next week, and as we head into Thanksgiving, we're probably going to slow down a bit. I don't think the overall market is overheated. I don't think we're going to get a massive crash. Again, anything can happen. So I suspect over the course of the next week, we probably tend to get more consolidation, and you got to be careful. The last week, particularly Friday was the day to go big. The beauty of Friday as well is you had weekly options expiring. Like, you could have played Tesla, you could have played BE, you could have played any of those stocks with options and done amazingly well. Now, that stuff kind of rallied. We've bounced. So Friday was the day to go big. And I think I was in Dubai for a couple weeks working with the trading firm. And of the 10 days I was there, I don't know, 6 of the days I just did jack shit. Like, I mostly just had a couple small losses, maybe a small win. I just totally broke even for 6 days. On 2 days, I had like an okay win, which offset a lot of the losses. But then on the remaining 2 days, I had a very strong view on those 2 days, and I did exceptionally well. It was this day when Palantir in the market broke trend, and I was short biased and caught that leg lower. Then it was this day when we kind of panicked and then bounced. So a lot of times I'm putting on very small risk, I might put on 10, 20 risk, 10K, 20K risk. Then on the big days, it might be 200K or 500K of risk. On Friday on some of these, I probably had maybe close to $1 million of risk on. And a lot of that is because I'm very specific with when and where I trade. Most days, if we're doing nothing in boringness, I might be doing absolutely nothing. Back in the Trillium days, I was doing 2 million shares a day, 3 million shares a day, 4 million shares a day. I was trading every little thing that moved. Nowadays, because I'm doing the million other things and pulled in a million directions, I'm only trading the big ops. That's okay for experienced traders who have that skew and don't mind that variance. If you are a beginner trader, you want to be going for your easy money trades. You want to be building out a diverse playbook of different opportunities. But as you get more and more experienced, your bet sizing is going to go from uniform to linear and then exponential. I've done a whole amazing podcast on that with Kyle Williams. I've done a whole amazing video on exponential bet sizing. And so if you're a beginner, this doesn't apply so much. All you want to do is hit base hits and start to build up your reps. But as you get more experience, that skill set of exponential bet sizing is the thing that separates people. And so if I look at kind of the last 2-3 weeks, everything I did, 2 of my big days were in Dubai when I was just with the firm, it was this day and that day. And then last week, it was this day. And this week, when we're in no man's land, I suspect I'm going to be super cautious. And so now, if I look at these quantums, I'm bearish overall on quantums. These are pieces of shit. But this just went from 45 to 25. Like, I'm not confident in a big bounce, but I don't want to necessarily keep on pushing the short. Circle, it just went from 140 to 80. This is also a piece of shit. I'm not confident in a big bounce, but I don't want to keep on pushing the short. Bravo Echo, this just had its big panic. This just had the high volume panic. Here's what's crazy. On this 11-13 day, this day here when the volume really capitulated, we did the same volume as on the earnings day. That is crazy, crazy, crazy. So now I suspect most stuff will consolidate. And the other implication of this is if you're someone that is like, I see this on Twitter all the time. So many people are so crazy gung-ho and bullish where all they think about is breakouts, breakouts, breakouts. Why are the breakouts failing recently? Because the market context has changed. You want to play breakouts when market is at highs and everything is humming. The times to make epic money in breakouts were the Ion Q. It was stuff like the Tesla. It was stuff like the Oklo back here. When stuff's super extended and cracking, and you have the leaders all cracking, like I've been pointing out this weakness for weeks and weeks. So if you're still just aping into some of these breakouts and wondering why they're failing, it's because you're not factoring in the market context. So if something is breaking out, I need to be really, really cautious. There is stuff like Apple holding up really well. So maybe if Apple consolidates and the market stabilizes, maybe I'll take a stab on something like Apple. But a lot of stuff is breaking down. So I'm going to be cautious on breakouts. And if we're in no man's land, I'm going to be trading minimally or at least less size and less frequently. And all of that is what allows me to make much, much more on the really good opportunities and not give it back. I think for intermediate and even advanced traders, one of the toughest skill sets to learn is the ability to immediately turn on the gas and really swing hard, but then the second the opportunities slow down, immediately turn it off. I've seen a lot of traders struggle with that skill set. Max at S&P Capital is someone that struggled with that. He would swing the bat really hard and have 400K months, 500K months. I think he's even had $1 million months. But then he struggled to turn it off. But by being aware of that and starting to build rule sets and communicate more with his pod, he was able to then control that, and now he loses way less. And guess what? If someone like a Max loses 100K in a slower month, that's okay. He's going to be fine. But so often what traders do is they might have a killer month, but then they just bleed, and die from a zillion paper cuts, so that then the slow times suck all their P&L, that when it's a good market, they can't swing as hard. So if you're an advanced or intermediate trader, and that's something you need to work on, build those rule sets. Because when you can really dial it back, then just as quick turn it on. That's what you really want to do. That's how you're going to start to really grow and reach that next level, because you're not just draining P&L. Every single day, what I tell traders is you want to handicap that day, not based on your prior day's performance. If you made $200,000 the prior day or $20,000 the prior day, because it was a really good day, the next day has no bearing. You need to go in on a totally blank slate. You are at $0 each day. Your P&L is zero. Based on what you're seeing, what do the setups tell you? What is the opportunity set? Every single day. Even in Dubai, this is probably one of the biggest things I was helping the traders there. Every single day when you wake up and you sit down to trade, you want to ask yourself two questions. How well slept, how well rested, and how prepared are you to face the trading day? How, psychologically are you focused on everything? Are you distracted? And then what's the opportunity set? If both are good, we want to up our risk. If we're super tired, if we got 2 hours of sleep, if we're distracted, or if the market opportunities suck, we want to lower our risk. And so often traders don't do that, which is totally asinine. And the second they realize that they're not doing that, they recognize it's asinine. So it's so important that you are constantly adapting your risk to how you're feeling and the opportunity set. And so for me, when I look at all these charts, I think a lot of this stuff is likely to be in no man land. This Oklo is not even close to bouncing. That could see more weakness. This MBIS isn't even close to bouncing. So like this stuff I don't want to play long, but we've really melted in some of this. We've closed a lot of this gap. So anything that did bounce strong, like a Tesla, I don't know. Can we bounce more? Maybe. Are we going to retrace them? I don't know, but I don't feel that strong. I felt strong at 380 too. I feel strong about BE at 92, but I don't feel strong about BE at 111. And so I know that doesn't mean I won't do a trade. I'm going to watch everything. That doesn't mean I just go to the beach or something. But it does mean I'll be a little cautious. So one other lesson I'm going to kind of wrap this up with is the importance of expanding products. And again, this is going to be mostly for, probably even just advanced traders, not even beginner, not even intermediate. And so one thing I've done, I think, well over the last couple years, kind of post-Trillium world, is I've expanded very nicely into options and found a lot of ways to play them, thanks to people, honestly, like Shark at SMB. And so right now I'm working with an amazing 8-figure trader, and he's never traded options before. He's not even remotely familiar with them. I mean, I think a lot of traders, especially on the retail side, they don't have that knowledge. They've not studied some of this stuff before. And so what we've been doing is we've been learning about options, and we've been helping him use options to structure some of his trades. Like with Circle, options were an amazing way to structure this because you had to hold through an earnings announcement and the possibility that people were going to try and, do some crazy PRs ahead of the impending lockup and play some of those games. So options can be an amazing way to structure stuff. Options can be an amazing way to reduce risk and open yourself up to big wins. Options can be an amazing way to structure trades differently. Like for example, SanDisk, I wanted this above 300. So there's situations where I'm willing to sell calls. Of course, extremely risky, the equivalent sometimes of being naked short. And so if you're an advanced trader and you haven't explored options yet, the beauty of options is it changes the expected value of your trade. It allows you to structure things differently that make more sense for certain trades. And for this trader that hasn't explored this world, it has been already incredibly additive. And all I can think about when I work with him is like, wow, like this trader is going to end up making, honestly, at least 7 figures per year trading options once he builds up that skill set. And for now, you always want to start slow. And like, even for a trader like him, a lot of my instructions is, dude, you just got to get the reps for small size. And we got to swallow our ego, and we got to be okay trading one contract in 10 different options just to get experience and building up that skill set. And if you're a trader that's only traded stocks, you might want to consider trading futures. The beauty of trading futures is you can trade stuff like Bitcoin. And I know obviously there's ETFs and stuff, but you can trade Bitcoin on Sunday evenings. You can trade Bitcoin overnight because of the futures. You can trade, stuff like the Nikkei, which I had a really nice trade on. And so I guess my point is, if you're advanced and you haven't explored some of this stuff, it's really worth doing that at some point in your career because it can really open up your opportunity set and just allow you to structure things way different. Even stuff like this gold, gold has had an amazing move. So not only is trading futures and stuff like this amazing, but so are the options on futures. So if you're someone that's kind of a more advanced trader, this is my message to you. Like, this is the type of stuff I've been working on with people, and they're finding it additive. And it's also just super fun. It's like a level of creativity that I don't think people get to use too much in trading world. So now I'm going to do maybe just a couple questions. We're going to call this one. Let's see. Okay, so open. This open was interesting. I think this has some warrants that become exercisable. So this had the huge gap down on earnings. Then this reclaimed. Once something like this reclaims, like if you're short this thing, you got to be so scared that this is going to catch momentum. And essentially this broke that downtrend. I was briefly long biased, but now we're just kind of right back in no man's land. I will say this, and I think Qual Maggie tweeted this as well, and I think it's pretty astute. Like, I do think open is kind of the meme stock of this saga, I guess, so far this year. And a lot of times this stuff does end up capitulating. That being said, I do think we're in a different market, and I do think froth is topped. So on one way, it's like this never really capitulated. Like, this was on news, this closed super strong. we never had its capitulatory moment, and every time it looks dead, it reclaims. So like, I'm open-minded to watching this, and more than that, I'm very cautious of shorting weakness in this thing because so often it reclaims. So right now we're in no man's land. I have no strong view on this thing, but it's always worth watching because this is definitely one of those stupid stocks of this saga. I think Eric Jackson is a total charlatan that's misleading and kind of borderline defrauding people with some of his rhetoric, but that is a saga for another day. So Alan is asking, what's so special about Friday? Was the bounce that obvious? I mean, nothing's ever obvious, I would say. You're just trying to stack probabilities on your side. And I think some of these moves were absolutely enormous. I mean, Tesla is down, 15% over 3 days. This BE is a massive, massive move. And a lot of this isn't really on any real news. So it's not that it was so obvious or anything, but it's just that I had a bias. Here's the thing, I had a bias, but then the chart setups confirmed that, right? And I think I tweeted this in this one mentorship post. The best trades, I never trade a bias or a view. Here's the thing to be explicitly clear on. If stocks like Tesla, if this stock was just grinding lower, I am not going to fight that. So it's not that I'm so biased where it's we had to bounce or something. What I'm trying to do is set up potentially even a core position, but then still trade the chart and my bias. So what happened is right off the open, this Tesla kind of had a little whiplash, but then it started to go, and this BE was just off to the races. A lot of this stuff was just right off to the races. I think even, oh my God, yeah, the quantums were right off to the races. And so it's not that this stuff, it's not that it's so obvious. Nothing's obvious at the time. If it was obvious, everyone would do it and the opportunity wouldn't exist. But it's just playing probabilities and reading the nuances. The nuances are everything, and you're just stacking odds in your favor and then placing very specific bets at very specific places. So what I will say is the BE, that to me was real good. So someone's asking, how did I structure the Palantir short? All I did was just short as I shorted as we went to lows on the earnings. Then as we broke, this was maybe after hours or pre-market in the morning, this was holding prior bar lows, and I just shorted that break. Let's see. 2 more questions I'll do, then we're going to call it. What is my view on Michael Burry? I don't know the obsession. He had one really good trade. A lot of his performance is not that transparent, so it's hard to see how good he's been. I don't read into this. He's been short biased for a really, really long time, and I don't feel like he's done particularly well over the recent years. So I don't know. I don't have a strong view. I don't know enough. I don't have a strong view, and I think the media just sensationalizes stuff. Who even cares anyways? What someone thinks as a hedge fund manager, it's not going to change my views as a trader. I couldn't care less. I couldn't care less what any hedge fund manager thinks about anything. What broker do I use? I do have a partnership with Clear Street, and I love them. I've been friends with them forever. That's a story for another day. So hold on, there's one more. So here's a good question we're going to finish on. Hi Lance, your multi-leg reversion concept applies to continuation plays following the premise of the more time a level is tested, is it more likely to break? So following the premise. So generally, I view those things as 2 separate concepts. The more times you test the level, the more likely it is to break. Meaning, let me see if I can, here we go. TheOneDaVinciB, hold on folks. We're going crazy now. That's what happens on Sunday nights. So here we go. TheOneDaVinciB. Okay. So if we get a stock and we go like this, then we pull back and it becomes support, So I want to see the stock break out and not pull back. The best plays go in your favor and don't pull back. If this pulls back, I'm concerned. I might buy this pullback, like Tesla. Imagine this is 370 in Tesla. I might be really interested in buying this, especially if it's sharp. But let's say Tesla bounces like it did on Friday. Let's say Tesla then rolls over the coming days. I'm less eager to buy at 370. Let's say we do find support and then we bounce, like it's more likely to break. I'm less eager to buy it and it's going to be worse expected value. Let's say we have an even shittier bounce, then we come back again. It's even more likely we're going to break, and I don't want to touch this at all. So this is going to be the best expected value. This is going to be less good. This is even worse. And you know, these two are definitely bad. This is a maybe depending how it gets there. So that's my view, that the more times a level is tested, the more likely it is to break. So let me delete this. That is different from my view. It's a different concept that the more legs something goes, like if we do one leg, then two legs, then three legs. So on the first leg, the probability of this pulling back, I'm just making stuff up, but you know, the concept applies, I'm just simplifying. The probability of this pulling back might be 30% and maybe we pull back to here. If we do two legs, the probability of this pulling back might be 50% and maybe now we pull back all the way to here. If we do three legs, the probability might be 60% or 65% and maybe we pull back to here. So what's happening is your probabilities are increasing as your reward is also increasing. In other words, if you're doing mean reversion, the more legs something makes, the higher your expected value is if you're playing mean reversion. So that's why if we look at stuff like this Oklo, okay, this is kind of one leg. You know, you can kind of consider this the second leg, which is much more aggressive. In stuff like SanDisk, like this first leg isn't that aggressive. This second leg isn't that aggressive. This third leg starts to get aggressive. This fourth leg is by far the most aggressive. So like, I'm way more interested in shorting this break than I am like one of these breaks. In fact, I'm not interested in shorting any of these breaks, but that break. And if we even take BE, my desire to play this turn is like nearly zero. Because this is a second leg and we've now gone 2 times as far, like here's the thing. We went from, call it 122 to 112. Maybe this bounces to like 118, 50% retracement. Once we've done 2 legs though, if we do a 50% retracement of this overall move, we're bouncing to 114. So or even if we get to 112 or something, like the reward on this is way, way bigger and the probability of a bounce is way, way bigger. So I view those as 2 separate concepts. So, okay, almost 50 minutes. We're going to call it there. Thank you for spending your time with me on a Sunday. If you enjoyed this, give a like and subscribe. I'm trying to do this every week. I'm spending my wonderful Sunday with you all, so please return the favor. Share, like, send good vibes to everyone. Internet's a wild place. Be friendly out there. Spread the love. Good luck next week. Wishing you all the best. Trade well, friends.